Welcome to TradeTheMBI.com. This is John. This report is for, well, what are we at here? The 5th of January. Befana is tomorrow here in Italy. Not something that's really celebrated most other places, but they're the witch who gives out the coal. And in this particular case, that's for Venezuela. Maduro, he pushed it to the limit, but let's just call it what it is. At the end of the day, Trump couldn't get any agreement for the Russian Ukraine situation. That was artificially causing stymie for oil prices. We've talked about this. Energy is everything, and he knew that he needed to drive energy prices lower. And at that stalemate, what are you going to do? Um, you know, we've recognized that there was a drop off in at least employment issues, even though there's been a growth in economic activity simply because of the investment. But there's a lag. And, you got Fed governors are like, oh, yeah, yeah, we've seen some, bending of the, labor market. It's like bending. Well, it's just people losing their jobs. It's a nice way to put it. But a lot of that taking place. And in the end of the day, you have the whole AI transition on some of that to blame. And it isn't going to get resolved. So in this particular case, if you can't get Ukraine peace with Russia and you still need lower prices, who's the next largest oil supplier in the world that you have any influence over? Well, it certainly turns to Venezuela because they're against you in every way, shape, or form, but they have the largest reserves and have completely, allowed things to rot in the country. So, uh, sure, you can claim it was drugs, but at the end of the day, what's the first thing that came out of the mouth was, oh, oil companies are going to come in there and revitalize it. So you tell me. Well, you don't have to tell me. I'm just giving you plausible reality given what was actually said. And will it have an impact? Absolutely. In the short term, not so soon. But then again, they couldn't get a resolution to the Ukraine Russia conflict. So whether there was going to be continued shadow fleet bombings or those kind of things, that was going to be, it was always a real hidden risk within the oil prices. And didn't matter how much supply you were going to get, you were always going to have that insurance coverage that in case of, broader terrorism kind of situation for oil tankers. Plus, it was just such a bad policy in general. The environmental risks alone, crazy that it was even allowed to be done. But what are you going to do? From an NQ standpoint, you can see we reached all the way below the 50%. It caused a little uptick here. Magenta starting to move back, but caught right here with the falling orange. So this is what we were talking about before: cyan, red, where orange is caught in between. That's usually a continuation of the situation, and that shakeout is ugly. And the dip below the red line, not a whole lot of excitement. You're going to get some automatic institutional buying just on the return to 50%, but still not a huge positive. Now, this may have some impact because obviously, people are going to be looking down the road and saying, okay, now what kind of transition is there going to be in Venezuela? Will it happen quickly, or will there be, an obstinate, objection to this oil transition? And if that's the case, then it's not going to have that much of an impact from the Treasury standpoint. Fed is useless, and they're pretty much sitting on the sidelines. From an oil view, there was a slight pickup. This is going to have a little bit of a downside, but it's too early to tell yet how much that's going to drive it. If they see that there's positive movement from the Venezuelan side that's going to allow U.S. debt, and I think you will definitely see oil make the move lower, which definitely has to happen if you want to see a strong resurgence. Of course, the focus turning back to the Western Hemisphere, not so good for the euro because everyone's going to realize really what happened was they started to see what was happening in German banks and the number of bankruptcies and the impact it's actually starting to have. Can't really hide it anymore, and it's starting to become painfully obvious what their net zero policies are turning into. Again, gold is still going to continue its climb. That's no question. That's just a built-in basis. You're finally seeing the crypto space turning around from its malaise. It's an interesting question too, because it was said that Maduro had converted a lot of Venezuelan gold into Bitcoin way back in 2016, 2017 range, which would mean you'd have billions of dollars worth of Bitcoin controlled theoretically by someone else. Was that part of, the liquidation, trying to create an escape route or whatever? Who knows? Um, Still, there was a significant sell-off within the broader crypto space in general. It may have been led by Bitcoin, but now it's headed up basing at this lower area where that magenta rising above there is now forcing, from a future standpoint, a little bit of short cover. And I think a lot of this was also the broader institutions, that demand that was being placed on it, put a squeeze on things before, then they just stopped. Um, Seeing if they could get better price. And then as soon as they were able to get better price, that's when they load up, get rid of the weekends, and then move on. And then, of course, that's where you see all the flipping around with margins and everything else when it came to, controlling these things. And that's how they stopped the speculation, grab people's money. From an ETH standpoint, likewise, similar move, a little bit stronger from its magenta move relative to Bitcoin, still caught right at 38%. I wouldn't call this a major dramatic move or anything. We did see from intraday play a little brief move up, but what was interesting is we went all the way back to the positive extremes, going back to 1219. This one right about here. Didn't quite completely fill that one. Was a little bit shy of it, but that's where you got a strong bounce off that, and it just took us right back to the ceiling of the previous positive extreme break right there, and we had magenta leading, so that drove forward. Of course, now MBI white's in the lead, but magenta's still above yellow, so that's still going to propel things. Probably going to hit our next resistance will be right at the same algo, the 69.30 range, but may not even be able to sustain that, particularly if magenta drops below the 25 with the MBI white lead. Then I think you're really world of hurt there. The biggest bonus for it right now is that you've had the rising gold in that started the lead of all this. Can it keep positive shakeout is the question, and that really is the ultimate determining factor as to whether or not this has any strength whatsoever. And so it's going to be easy for us to see that one. And when you look at the minor intraday, it was just all selling till later in the day, and then they flipped it around from an option standpoint, and not a whole lot of anything happening here in the European session. Asia was quiet as well. So that's the long and the short of it, but definitely an interesting development. Certainly fits in line with my thesis on energy, and no shock there whatsoever. Got to see lower oil prices in order to justify economic growth that will be sustainable at a significant clip. That's the only way around it. That's the long and the short of it. Anything relevant, I'll put on the team chat. Trade well.